clearly it's been a very busy 2026. A lot of events have unfolded over the first 4 months. As we all know, that we had combat operations initiate in the Middle East. But there are things I wanted to speak to this afternoon that I think are important. These are the 3 things that I would frame as things we've learned. First and foremost, the macro picture here in the U.S. seems to be pretty resilient. The U.S. government released their first estimate on the economy today, and that number came in at 2.0% annualized in terms of real growth. That's subsequent to what was a fourth quarter real growth estimate of 0.5%. So we're showing some signs of momentum. Clearly, there are some impediments or headwinds that hit this economy. We had higher energy prices due to the combat operations going on in the Middle East. We've also experienced in January and February, you might remember, particularly cold months of weather, and that was a damper on the economy as well. But sitting here today, this 2% real growth estimate to me signals that we're going to have some momentum looking out for the balance of this year, and I feel pretty confident that this is going to be a decent year for the U.S. economy. The second thing that I think we've learned, and it starts with the month of April, we've got Q1 earnings releases coming from U.S. companies, and they're actually surprising on the upside. As we look at the majority of the companies having released at this stage, maybe 60-65% of companies releasing, the growth year over year in terms of earnings has been north of 12%. We're approaching, some estimates right now will be closer to 15% for the quarter, which is a really strong acceleration of profitability for U.S. companies. To us, the fundamental picture for U.S. companies remains very positive. And I think the third thing that we've learned recently is the fact that in the Federal Reserve, which is an important part of the investor picture that we're following, Chairman Powell will be replaced. The Congress passed through committee the nomination, Kevin Warsh, for the new chair position that will likely take place now in May. And so we're going to see a change of leadership of the Fed. And those are all steps that we are anticipating, and so that's a kind of a certainty at this point. But the one thing I would also go on to say, because of the spike in energy prices, because of the transition that will take place with the new Fed chair, it's a little less clear to us what the Fed will do with the policy rate, the federal funds rate. We expect maybe 1 or 2 rate cuts this year, but the picture's a little less clear, perhaps than what we thought when the year started. So the 3 things we learned in summary are, the big picture backdrop looks pretty decent for U.S. investors as we sit today. 2, the fundamentals behind the U.S. stock market look really, really strong, driven by the fundamental factors of AI and all the cap spending that's going on there. The fact that consumers today have more money in their pocket with the tax receipts coming from their tax filings. So the fundamentals with the U.S. In terms of U.S. stocks looks really good. And the third thing in the kind of the uncertain variable of monetary policy, that picture continues to develop. We think we're going to have a new chair come in the second quarter, and we think that's going to represent some things that we anticipate when the year started. So we like what we see. There's a lot of uncertainty. We're going to continue to brace for volatility in 2026. This is a transition year, and so it's one that we think you need to be prepared for volatility. But the picture to us at this stage looks pretty good.